But let's take the discussion forward and welcome on board Kunj Bansal on the show. Kunj, just wanted to get a sense from you with respect to the market itself. Very, very slow, very, very sluggish. What do you do in this kind of markets?
So these kind of market are indeed required. Otherwise, the fresh money coming in will not get the valuation comfort. Just to put some numbers in context for our viewers, it was around 20th, 19th or 20th July, that is in the last month that we had touched close to 20,000 in terms of Nifty. And from there, we are kind of in a range bound movement. Of course, on a net basis, if we will calculate, we are down about 3.5% in 1 month or so, which is quite okay. So what happens is when market starts to take a direction either upwards or downward, it obviously can't keep moving in the same direction forever. Because especially if we talk of the upward movement of the market, then the valuations will completely become unaffordable, so to say, and the fresh money will not find valuation comfort to come in. So market always goes, touches a milestone, and then comes back and gives opportunity to the investor. If we look at some other factors, we can see that after the continuous inflow of global money coming in last 3 months, leaving August. So in July it was quite net positive inflows. Before that June, and before that in April and May also. In August that has not been the case. August, the net inflows and outflows from global money are balanced against each other. There is hardly $1 billion plus kind of number, which is quite flattish. So that's a short-term phenomenon. In terms of triggers, we are more or less run out of the trigger in the short term. The result season was over few days ago. Monsoon progress has been mixed. So market is at a stage wherein it is not finding any reason to take a direction, and which is where we are. And as I said, which is quite okay.
Right. So, Kunj, are there any opportunities that you're identifying?
Yeah, so in such kind of markets, the opportunities, one for the short-term traders, will come more from the technical chart patterns with their strict stop losses and things like that. For the medium-term investors, yes, there are opportunity if we go by the numbers, the quarterly results that came in for the quarter gone by, for the June and even before that, and the expectations. So, and along with that, if we mix the broader macroeconomic developments and news flows and actual numbers, we can continue to see that the heading into the election next year in 2024, we will have a lot more spending on the capital expenditure coming in from the government. So that is a space, whole capital goods and engineering space, despite valuations and absolute prices having gone up, I think will continue to give good returns. Auto has taken a breather after rising in the first 6 months of the calendar year, will probably start giving an opportunity again. And rural consumption is one theme that is still in the waiting mode or the watching mode, but looks like, given the although the monsoon progress has been mixed, but there are some mixed signs right now of the rural demand picking up. If that happens, then that is where we will again see opportunities. So these are the spaces.
Still some spots that you can look at to make incremental investments.
Investors have made money, and that continues to be the consumer's choice as well.
Yeah, so while we do have stress on, especially on the rural demand, maybe partly on the urban demand also, the inflation has been kind of made it difficult for people in the middle and the lower middle and even below that to go and do discretionary spending. So their focus has been to focus the spending on more on the basic requirement, that is the food. But yes, at the same time, there is this dichotomy that the higher end spending is continues to be there. We have all the airlines which are running reasonably full, high load factors. We have the hotels and the restaurants which are running full. We have the multiplexes if the movies are good, which are running full, and we have the higher end consumption, let's say the four wheelers, passenger vehicles which are running full. The same gets extended to the higher end consumption in the durables and non durables as well. Also, along with that, what we notice is that some of the companies, some of the managements have really built strong business models. So they have built strength in terms of the either the distribution, both physical as well as online, and also have been able to maintain the pricing power. Thankfully, commodity prices have been supportive in the last 9-10 months. So that got reflected partly in the margins for the June quarter. Hopefully, should continue to get reflected in the September quarter as well. And that's where we have seen, of course, the fact that the money continues to come in both from domestic investors and global investors. So they do keep looking for such kind of well-managed businesses irrespective of valuations.
Okay, point taken, Kunj. So that's a take coming in. Just quickly, what's your take on that? And would you probably hazard a take at the PSU names as well, you know, the NHPC, SJVNs of the world?
So these are the calls which are always difficult, as we were discussing earlier, that we indeed are seeing and will continue to see heading into the election next year, a lot of spending by the government on infrastructure, which includes power as well. Power in any case has been a focus area for the government, otherwise also irrespective of election, more specifically renewable. And a lot of companies and managements have built their business models around that. And that is already visible in the kind of return that the power sector in general has given in terms of share prices and also the companies in their financial performance. Looks like yes, that will continue to be a space that will continue to outperform given the overall positive sentiment that is there towards the market, towards the macroeconomic numbers of growth that we are seeing, and towards the investment that will continue to happen in the power sector, both by private players as well as by the public sector.
Right, okay, that's the take coming in on Geo Financials. That is one stock which has really been all over the place. You know, Kunj, wanted to get your thoughts in on the entire power pack, you know, both pure play as well as ancillaries there.
So the names you highlighted from across the three sectors, if I mix them and if I put those together with your question, the defense, the railways, and the power, largely come from the public sector space, the PSU companies. Now, that is one space where we have clearly seen the focus of the government coming in terms of supporting the business models of the companies under its ownership, that is the public sector companies, in multiple ways. One in terms of policy support, two in terms of the backing to the managements, three in terms of creating supportive environment like Make in India, like forcing them to look beyond India to market their products and services, and of course actual release of orders across all these three spaces. So there have been significant release of orders in the whole railway space, there have been significant release of orders in the defense space, and so has been the case with the power. Now, coming to the companies and the sectors and the valuation, they were anyway significantly undervalued because of the underperformance of last so many years. That also led to the under ownership, let's keep in mind, mainly from the institutional investors, both global as well as domestic. Now, these three factors put together, the increasing financial performance, mainly led by the supportive government policies, undervaluations becoming getting it right to coming to the average. I wouldn't say it has gone over valuation, and under ownership also getting covered up, has resulted in this kind of performance, and that's really good that we are seeing new and new investment opportunities being available to the incremental money to invest in the market. Otherwise, somebody has to invest in the market. You had those standard automobile, FMCG, banking sector names to come in terms of these strong business models. If you extend little bit, maybe some consumer durables and cement and IT and pharma will come in. But then there was a caution going ahead into the cyclical kind of sectors, which is where these new spaces have emerged, and that's really been good for the money which has come in as well as for the overall sentiment of the market.